QuickBooks Pro Desktop 2021. Sales by customer and income by customer reports. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars practice file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We're now going to be taking a look at the income by customer and the sales by customer reports. Like all other reports other than the major financial statement reports, balance sheet and income statement, they will be supporting some line item expanding on the information that will be included in some line item on the major financial statement reports, balance sheet and income statement. This time, we're focusing in on expanding information that is found on the income statement or profit and loss. Let's open that report first. Reports drop down, company and financial. We want that profit and loss standard report. We'll change the dates up top from 01/01/21, 02/28/21. There's going to be our income statement. Up top, we have our income statement line items. You'll note that the income statement is typically going to be broken out in very few line items on the income statement. You might just have one. If you sell inventory, you might just call it sales, and that's it. You got sales up top. If you have multiple kind of groups like we do, different major categories of income, like we have equipment rental, guitar lessons, and sales, which is income sales and other service items, where we're breaking those out into their own service, their own line items. But what we're not doing is trying to break this information out, say, by customer, meaning we're not trying to make another line item on the income statement, even if we have major customers, because we're going to use other reports to do that, which we will see now. And we're not breaking this out by individual, basically, things that we sell or services we do. We have groups of services, which might be relevant to put on the income statement to provide information in that line item. But we do not have like actual, the actual service, individual service line items, like in our case, which guitar instructor had the guitar lessons. I'm not going to break out the guitar lessons by instructor. We're not going to break out the sales by actual guitars that we sold, because we're going to do that with another report, one we'll see now. You can get to these reports. We'll take a look at the the sales report first. By going to the reports dropdown, we can go to the sales line item, and we want the sales by customer summary. And then we'll take a look at the detailed report. You can also break it out by item, which is basically inventory and service items. I'm going to do this, however, by going to the reports dropdown and going to the report center. We'll maximize the report center over here, and then I'm going to go into the sales line item. So when the standard tabs, sales line item, first one is going to be that sales by customer summary. So I'm going to go ahead and run that report. Let's run the sales by customer summary. And sales, basically in terminology, if you get into like finance type of terminology, sales really just means income. Sales means income. If you hear the word income, usually that also stands for the top line. Like, in other words, if I go to the income statement, notice this whole top area is basically total income. And that's not net income. That's going to be total income. And a lot of times it'll be called sales when you sell actual inventory items. It'll be grouped in sales. If you sell service item, you can name the income account anything you want: fees, sales, and so on and so forth. But technically, this line item often is called basically revenue, the revenue item. And if you look in like finance and courses and stuff, you'll hear the terminology get kind of mixed up because they're trying to shorten the terminology. So they might start to call the income line, instead of revenue or income, they start calling it sales. So the top line of the income statement starts to be called sales for some people. And then the bottom line, instead of saying net income, they might abbreviate to income. So sometimes if you hear someone saying income, you might think, okay, are they talking about the top line income, or are they talking about the effect on net income? So you gotta break those two things out. In financial accounting, you'll learn that the top line could be revenue or it could be income, sales, and whatnot. When you talk more into finance, they start to change the terminology somewhat. And I think in terms of, or the reason is because they're trying to shorten things up and make it a shorter thing. But in any case, just keep that in mind as we go, because we're talking about the sales by customer, which is income. They mean income there. So top line item of the income statement. So this is going to be 01/01/21 to 02/28/21. And so now we have our breakout. Notice the bottom line here, the 56,144, is going to tie out to the P&L, the profit and loss, with the 56,524. We're a little bit off, and let's check it out. I'm going to pull out the trusty calculator. This is probably an adjusting entry it's off by. Let's check it out though. 56,524 minus the sales over here, which is going to be minus the 56,144. It's off by 380. Now, if I go back to the profit and loss and double click on the, I think it's going to be in the sales item here, that 380 is a journal entry. So that's an adjusting journal entry that, and we'll see that when we do the adjusting journal entries, why we're going to enter that in, and we'll actually do a reversing entry. So it should kind of reverse itself and everything should be okay after we do the reversing entry. We'll talk about that in the adjusting entry process. I'm going to close this back out. So in essence, that's going to line up here. This is going to give us our sales, but now it's giving us our sales by who we sold it to. So it's going to break it out by customer, which can be very useful because this will tell us who our most valuable customers are by giving us, a lineup of who we sold the most to. So bottom line is you do not want this information. These customers, then you wouldn't want to go to your profit and loss and say, here's sales to my primary customer, so that you like have a different sales line item to your best customer or something like that. You don't typically want to do that because you could still break that information out in the sales by customer, which will give you supporting information to your sales line items or your income line items. So for example, I wouldn't want this customer basically broken out because they paid us the most and give them a separate line item on the income statement. That would be weird. Instead, you keep it all in income, and then you have your sales by customer reports. Let's go back to the report center, and then we can also see the sales by customer detail. If we want to run that one, let's run that one. That'll be fun. And this is going to be 010121 to 022821. And so now we have our information by customer. Bottom line should line up to the same item of the 56,144. But now we, of course, have our detail of what is included in these items. Now, the sales items, sales are going to increase by what? Invoices and sales receipts. Those are the things that increase sales. In other words, if I was going to go into the profit and loss and take a look at this sales line item, the types of things that increase sales are going to be invoices and sales receipt. And sales only goes up. Income statement accounts, sales and expenses, or revenue and expense typically only go up. So these things go up with two types of forms. Either we sold something on account, invoice, or we sold it for some form of payment at that point, sales receipt. So if I close this back out, that'll be the same detail we will see in the sales by customer detail. We can break out the detailed information by customer. So obviously this information can also be found, or similar kind of breakout can be found, similar kind of breakout supporting the major line item on the financial statement of the income statement, or P&L, in the customer center here, or dropping down the customer center in this format under the customer center. You can then take a look at the customer information, and any individual customer look at the items and their activity in this format as well, giving you the invoices, and then this will also, of course, give you the payments that you have. Transaction detail here can also give you your invoices on the right-hand side, selecting the invoices which are either open or all invoices as well. So similar kind of things can be found in the reporting, the reports, as well as the customer center. So let's go back to, let's close out some of these reports. Now I'm going to close this one out. It's getting kind of crowded. Don't want to get it too crowded here. So we'll close this one out, close this one out. I'm going to close the customer center. So I've got the profit and loss, and that looks good. Now let's go back to the report center. Now let's go up to the company and financial. And this time we want to scroll down from the company and financial and take a look at the income and expense, income by customer summary, and income by customer detail. These seem the same because income, once again, you would think would be income, the top line item of the P&L, because that's what the top line item is. But now income basically means what's the effect on net income for this report. So let's consider that here. We're going to say, keeping that in mind, this report's a little bit different than running this report. And we'll change the dates up top from 010121 to 022821. Bottom line of this report is the 25,536. If I go to the income statement, we're going to say, all right, income statement, you would think it would be this number, which is the gross profit. And so let's just check that out. 25,232 minus, it's going to be off by an adjusting entry again, minus the 25,536. It's off by 304. If I go back to the P&L and double click on the cost of goods sold, you're going to see that that's going to be an adjusting entry here. So we'll get into that journal entry, that adjusting entry, why we entered it. We will reverse it. So that difference will then reverse itself once we do the reversing entry. We'll talk about that at that time. But notice that when we sell to customers, if we sell inventory items to customers, then you're going to have an increase on the sales for the inventory items. So if you increase the sales, as we saw with the invoice, when we make an invoice or a sales receipt, and then we also have an increase to the expense side of things for the cost of the thing that we sold. And so now we're talking about a report that's giving us the net of the two. So this is telling us basically the net, or the effect on net income. The effect on net income for customers is going to be basically the sales we had minus the cost of goods sold. They're not going to have any expenses to customers because those are the people that pay us. They pay us, but we still have one expense that would be applicable to them, that being the cost of the goods that we sold to them. So that's going to be this breakout then. So same kind of report, kind of gives us an idea of our best customers, but now it's lowering the amount that we have received by the cost of goods sold of that item that we sold to them. And if you don't have cost of goods sold and you just have service items, then this income by customer report will basically be the same as the sales report. But it's important to note the distinction, which isn't as apparent just simply by the title, because you would think it would be like the effect on net income by customer or something like that, but that would be kind of a long title. So the income versus sales. Sales means revenue. Income means the effect basically on net income. So let's go back to the report center and let's do the detailed one. Run this report and say this is going to be a similar report, but 010121 to 022821. Now we have the detail on it. So now we've got same kind of thing. It's going to give us the invoice and the sales receipts here. And if I double click, say, let's double click on an invoice up top, say this invoice 400, the $400. So there's the actual invoice. We sold it for 400. That's the sales item. The cost of it then is not included here, but remember the invoice also drives the cost of goods sold. And that's why it has two line items that are going to be here. So the cost of it was 320. So on the other report, sales by customer detail, it would only have the 400. This one shows the 400 sales price, the money that we're getting from the customer, and it shows the cost of the good that we had to give the customer, netting them out if we sold inventory items. For items that are not inventory items, then of course we won't have two line items such as this one. This one was guitar lessons, so there's no cost of goods sold. So if you're in a company that doesn't sell inventory items, your income by customer detail will be pretty much the same as your sales by customer detail.